Andre, mortgage rates are back up over 7%. I thought they were going to be coming down and the market would go crazy in 2024. So did I. If there's one thing we've learned recently, it's that you can't trust the Fed. In this video, we're going to discuss where mortgage rates are headed in the future and what they're looking like for May and June. Welcome to Dre's Take. Interest rates are heading in the wrong direction. Mortgage rates currently hover around 7.39% as a national average, which is closing in on the high of 8% that we experienced last November. This is obviously causing demand to suffer and homes to sit longer, causing frustration on both sides of the buying and selling equation. The one thing we know at this point is we can't trust the Fed. Remember transitory inflation that wasn't so transitory? Remember we were going to see 4 and maybe even up to 6 rate drops in 2024? Well, we're almost halfway through the year and rates have remained unchanged. Experts have adjusted their forecasts from 5.5% as an average 30-year fixed rate mortgage rate by the end of 2024 up to around 6.5% now. So what's the rhyme? What's the reason? Who knows? If the mortgage gurus can't get it right, then we don't stand a chance. What we do know is that inflation is remaining stubborn, not so transitory. It's quite sticky actually. Still around 3.5% according to the CPI numbers recently, and subsequently the Fed remarks have been hawkish, so to speak. Code word for stubborn. They're not gonna budge. They're going to leave interest rates elevated. That in turn is disrupting the bond market and sending the yields on the 10-year Treasury notes ever higher, resulting in higher mortgage rates. As of now, the outlook seems to be mortgage rates are going to remain in the 7% range throughout this month and going on into June. If we're lucky at all, we may see some downward pressure on mortgage rates after the third quarter of the year, but at this point, I wouldn't bank on it. I think with gas prices as high as they are, inflation's going to remain elevated above that 2% target, and the Fed is probably going to keep rates right about where they are throughout the rest of this year. I wouldn't anticipate any strong downward movement in mortgage rates until 2025 at this point. I know this isn't the greatest news for buyers or sellers alike, for a multitude of reasons. Obviously, sellers who sell then become buyers and aren't really excited to take on a 7% interest rate. And for buyers currently in the market, it's just making many homes unaffordable. If you do need to buy, however, you do get a little bit of negotiation power out there. As inventory has picked up through the spring and heading into the summer months, you've got a few more options and choices out there, and you can probably get yourself a pretty good deal, get some closing costs paid for, or work out some other accommodations that make the deal doable for you. The payment might not be as pretty as you'd like, but hopefully in years to come, a refinance market presents itself and you can get those payments down while being in the property that you want. And for sellers, fighting for the limited amount of buyers that are out there now. It's more important than ever that you make the property as show-worthy as possible, as move-in ready as possible, and that you're open to some repairs and some negotiation, and that you're patient, as homes are gonna sit a bit longer when buyers have more options. We are certainly not in 2022 anymore, but if you've got an experienced agent on your side and you're patient and you're reasonable, you can still make something happen in this market. You can get your home sold, you can get into a new home of your dreams, whatever your goals are. It just may take a bit more compromise and patience than you'd originally expected. That's it for this week, you guys. If there's anything I can do to help, feel free to reach out. I'm always happy to do so. And until next week, that's Dre's Take. Take care, you guys.